Hello folks, this is Russell Shor from the Shor Report, and in this short video I'd like to tell you what the Shor Report is really all about. Effectively, what the Shor Report is here to do is to help you grow your wealth with investments in the JSE. And when I talk about investments, I'm talking specifically about blue chip investments, investing in good companies, the very best of the JSE. Now, the way that the stock market typically cycles, it goes from what we call a stage one accumulation, which happens after a bear market, moves into a stage two uptrend. Then what happens inevitably is that stocks become overvalued and the prices are unsustainable. They start being distributed, and that's your stage three. And then the stage three moves into a stage four downtrend, and that is effectively your bear market. And once the bear market completes, we go right back into the stage one accumulation and the cycle repeats itself. So what the Shor Report aims to do, it aims to participate in the latter stages of the stage one accumulation stage, as well as participate in the stage two uptrend stage, and then start exiting in the stage three distribution stage. We do not want to be invested at all during a bear market, because this is the times when portfolios get absolutely obliterated. Now, when you are constructing your portfolio, it's going to be subject to a normal distribution curve. And what that effectively means is that most of your positions are going to be either small wins or small losses, and those are generally going to contra each other out. But you're also going to have a handful of very large winners, and you're going to have a handful of very large losers. What we are trying to do in the Shor Report is we're actually looking to try and shift the distribution by making a conscious decision of which shares to include in our sample. So we're trying to shift this distribution curve outwards and effectively skew the distribution into our favor. So once we've chosen the particular sample of stocks that we are interested in, we actually have what's called a positively skewed distribution curve. And what that shows you over here is that the right-hand long tail, this is where your big-time winners are, is much longer than your short left-hand tail. But even that is something that concerns us at the Shor Report, because even these losers in the left-hand tail can cause tremendous damage to our portfolios. So what we also look to do is we look to cut our losses very, very quickly. Now, typically, what you expect in a issue of the Shor Report is stock market commentary, and you use that commentary in conjunction with what we call our rate of change performance tables. And what we see here is the table. This is as at 31 March 2015. Basically looking at the top 25 fastest stocks. The whole idea behind the Shor Report is for an initial allocation to the top 10 out of the top 25. And what happens is that these shares will start jostling for position, and eventually one of them will fall out of the top 25. When that happens, it's telling you that that particular share is losing its momentum. So what you'll do is you'll cycle out of that share and you'll go into the top performing share according to this table that you don't own already. And there's very, very good reason for this. This effectively is helping us shift that distribution curve. It's helping us positively skew it. So this is aiding us in reaching those right-hand long tail positions that we're after. At the same time, remember, we want to cut our we want to cut our losses short as quickly as possible, and there's very, very good reason for this. If I can just get you to take a look at this table. In this whole slideshow, this is probably the most important slide. And what it's telling you is that if you lose money, it's very difficult to make it back. So if you lose 10%, you have to make back 11% on what you have left over just to break even. So just to give you some figures there, just so you understand, let's assume that you have 100 Rand. you lose 10% of that, which is 10 Rand, so you're left with 90 Rand. If you make 10% on that 90 Rand, you're only getting back 9 Rand, so you're at 99 Rand. There's still a 1 Rand that's missing from your break even. And if you go down the table, you see the more you lose, the more difficult it is to actually break even. So it's very, very important to control your losses, and that is really one of the key objectives of the Shor report. With the Shor report, our number one objective is to preserve your money, and that simply relates directly back to the previous slide, because the more money you lose, the more handicapped you are to actually grow your wealth in the JSE. So that is our number one objectives. The second objective that we have is that we let the profits run. We go right through to that right-hand long tail and, of course, cut our losses very quickly, which is the way we preserve our money. Now, what does this all mean for you? Well, the Shor report methodology is a mechanical system which basically takes the emotion out of investing. You can see our system compared to the JSE All Share. We've done a back test going from the 31st of May 2001 all the way back to the 31st of May 2014, and it was a rigorous back test. I must concede we did not include any brokerage costs, but this is not a trading system, it's an investment system. So there's not that much turnover and the brokerage is not prohibitive. But we also haven't included dividends received and we haven't included interest earned. So if you do decide to participate in the system that the Shor report offers you, you are being exposed to an extremely profitable system that will really help you build your wealth through respectable and good investing in blue chip shares on the Johannesburg Stock Exchange. So what I'd like you to do, I'd like you to take advantage of a free trial that we're offering at the Shor report. You'll see underneath this video there is a registration form. What I'd like you to do is just enter your name there, enter your email address, and then click on the register for free trial. So that's really it from me. I hope that you found this presentation informative, and I hope to speak to you guys soon. Thanks very much. Cheers.